What if America's need for critical minerals is the hidden risk that could shift global power and drive new investment trends? Find out how the race for mineral security, plus markets like Israel, could create unexpected winners and losers in your portfolio.
A near-term off-ramp, but he is right. November the 1st is an eternity away, so we'll have to see what happens between now and then. That's the near term. But let me just try and level set here, Frank, about the long term and what we're facing. The pink elephant in the room, and I hope the markets realize this, is that we are experiencing what weaponized interdependence looks like. China has built out a legal and regulatory toolkit to protect their interests, to push back when threatened, and to control their own destiny in the international system. And for us, we have a material vulnerability to a need for critical minerals, which they control. So no meeting on November the 1st, no short-term solution is present to us. And in my mind, that means the China risks are still there. Despite a meeting, despite what happens between now and then or after, we have to figure out how we address the chokehold that they have in critical minerals. That is the pink elephant in the room, Frank.
Yeah, we just got that report that the Pentagon is trying to address that right now. Stephen, I want to come over to you. What does this mean for investing in Chinese equities in particular? We've seen a lot of people be considerably more bullish on Chinese equities. There was a thought maybe a couple of years ago they were uninvestable. What's the landscape for those right now?
So, good morning, Frank. The thought about China being uninvestable was current even as recently as late last year, early this year. But regardless of your political view, and I agree with Mr. McNeal, the Chinese have weaponized interdependence, but China is too big to ignore. What we advise our clients and what our benchmarks provide is a broad investable exposure to China. Investors can decide whether they want to overweight or underweight. I do believe you need to treat China separately, but I don't believe American investors or global investors can be completely out of China because individual Chinese companies are global and operating worldwide. That exposure has helped investors in emerging markets this year so far, and it's also helped investors in global portfolios this year.
Dewardric, coming back over to you. There's some talk that some of this tightening of rare earth exports and some of these controls on chips in China is simply a negotiating tactic. Do you see that as viable with the president, President Trump, of course, and President Xi expected to meet later this month?
Well, I certainly think that we can't discount some of the gamesmanship that may be going on between now and what is a potential meeting on the margins of APEC. That is true, Frank. But I want to recenter us again here. These export controls, China's legal and regulatory toolkit, has been in the works for several years. So it's a bigger story than just this meeting that could take place. This is about China, again, trying to find a way to control its destiny in the international system and trying to use our strategic vulnerability to make sure that we are not able to push them around. That's a longer term story. It's not going to end with a meeting in Korea on the margins of APEC.
I want to ask you, when China sees the U.S. government and this administration buying shares of companies that produce critical minerals and rare earths, does that increase tensions? Does that seem to that government that the U.S. is basically trying to improve its negotiating position ahead of the meeting?
I think what China should be saying is that eventually, when you weaponize interdependence, countries, and they've tried to do the same with respect to chips, tries to unwind that vulnerability. So, yes, there could be a short-term view of this for China, but the pink elephant in the room for China is the U.S. has no intention to remain choked off with critical minerals. So it's going to take some time, but China should see this as a signal that over the long term, their dominance in this space will be decreased by the U.S. and hopefully U.S. allies.
Steve, I want to come back over to you. Let's say these trade tensions remain elevated. What parts of the Chinese market do you see as most directly impacted, and what would that impact be?
So the Chinese tech stocks are vulnerable in the same way that U.S. tech stocks sold off so dramatically on Friday. U.S. has already indicated that it could target them, and they are the most globally exposed. In contrast, Chinese companies that focus on the domestic economy, which are insulated from some of these tensions and are benefiting from the reforms underway in China, those would be relative safe havens. You also have stocks in Macau that benefit from consumer wealth. So there are still many, many sectors in China that could be unaffected by these tensions.
Stephen, I also want to ask you about some of the news that we're seeing today. Again, President Trump speaking to the Israeli legislature today. I do also want to point out over the last 2 years, while we've seen the war between Israel and Hamas go on, we've seen outperformance by the Tel Aviv Stock Exchange. Do you expect that to continue with phase one of the peace plan seeming to roll out as expected?
Yes, Israel, despite all the geopolitical tensions, despite fighting and winning a seven-front war, the political risk and the perceived risk of the Israeli market has steadily reduced, especially after Israel took out Iran's nuclear capabilities. The Israeli shekel is at a multi-year high. Israeli local stocks are at all-time highs, and Israeli global stocks, which are available as ETFs in the US, such as the ISRA ETF, have hit new highs. We think the ceasefire will continue to undergird Israeli markets. And because Israel is such a small part of most investors' portfolios, we think it's worth a dedicated allocation